G'day, everyone's video on Sunday the 29th of December 2024, just gone 3:38 AM Chicago time. Do hope you are doing well. So it's the weekend and time for another weekend futures market recap. We'll go through 15 of the largest futures markets and I'll show you what I'm seeing on my charts. So after the last video, Mrs. Emini-Watch reminded me that I did not wish anybody a Merry Christmas. My apologies for that. I hope everybody had an excellent Christmas and a Happy New Year to everybody coming up in the next few days. We're in the middle of packing up at the moment, leaving France on our usual schedule, off to Hawaii in a few days' time. So we're not going to be trading much next week because we're going to be in and out of hotels and airports. But it's been a great stay in France this year. It's been cold, but we've had excellent waves in the last week, so it's always nice to leave a place with good memories. So yes, we're going to talk about the E-mini in this video, and we're also going to talk about the futures markets. But rather than doing a normal review, we're going to talk about a year-end review and a rotation that often happens going from December into January. Remember that the big fund managers are rebalancing their portfolios, and they've had consultants in over the last month and a half telling them what the forecast is likely to be for the next year or so. Imagine all of their models had to be changed after Trump came in November, and often this time of year you can start to see the setup for those big rotations. So I'm going to go through a few charts and talk about the big picture, what we might see for next year, and I've got one pretty high conviction trade in that, so I want to talk about that in a few minutes time. But let's talk about the E-mini first. Last weekend's video I was saying we probably needed to test back down to get our flush pattern in. Didn't exactly play out the way I expected it to be. We bounced really hard, closed the gap, and now we're coming down. I think we're going to put in those flush patterns with this next push down. But let's look at this daily chart. Background on the left hand chart is in red. We're in an uptrend in terms of price and volume, and I think we're just going to be testing into this region in the next week or so and then bounce out of this. Next chart down, the 135-minute chart. Here you can see the big sell-off that we had. Here's the blue professional bars coming with an exhaustion sell pattern. I like that as a nice big setup for where the professionals stepped in. They were not taking profits at the highs. They were the amateurs at the highs that were getting wrong-footed up here. So the professionals have decided to step in at the lows. Trouble will come when we have blue professional bars at the highs. That's when we need to take note. So we're still in an uptrend. 135-minute chart, that's important. But we put in a resistance on the lowest time frame here. It's a pullback in a downtrend. And we've still got this cyclical energy to work out on the 135-minute chart here. So this pullback has got to go down and make some testing pattern into these lows down here. So this 5,898 level, absolutely key. I don't know, are we going to come close to that? Are we going to just briefly bust past it in order to freak people out and then trade back up? But we've got this energy to play out. 45-minute chart, here we go. You can see all of those blue professional bars, and we know there's super high average trade size because the background's in blue as well. So that's the big pro bars coming in here. There's our exhaustion sell. There's a nice bullish divergence pattern. That's really nice. Remember this one, the exhaustion sell, was getting the move going. That's showing us the strength of the selling from those highs. So all of that activity, that selling activity, has now mostly come out. They've taken profits down here. They've started to go long. We've got a bullish divergence. This is good. But here's that resistance that needs to play out. It's a pullback to end of trend down here. So any break below 6,000 or 5,982 down here would mean that we're going to get some weakness, and let's see where we end up. I would suggest we're going to be in this here, but who knows. 15-minute chart. This is what I was talking about with last week, where I expected a flush pattern because we had a bullish divergence right on the zero line. And when we have that, normally we need to come back down and put in a flush pattern here. And I was thinking we were going to get that at the beginning of last week and test back into those lows. But no, that is not what happened. We continued to break up and close the gap where we had the breakdown here. We came all the way back up. And there we go. There's an amateur bars sequence of them right at those highs. Poor old amateurs getting wrong-footed at those highs. And we get a nice little sequence there. What is that? We've got it's a pullback in a downtrend on the highest time frame on the 15-minute chart, syncing up nicely with a little pullback to end of trend on the lowest time frame here. So we got cyclical resistance at that point, and then we head back down. So we've got this energy, that resistance. It's on all of these time frames. You can see it. It's that one there. It's that one there coming in that we need to play out. Yes, we have a little bit of strength at the end of the day on Friday on that 15-minute chart, little signal there, but is this whole area going to hold? and then the 13,500 2-bar chart where we get a little bit more granularity here. So on this chart here, we had exhaustion sell getting the move going with the big break after the FOMC, and we didn't see exhaustion sell on the downside here or here. We had a whole family of Rambo patterns. Remember, Rambo pattern is a potential reversal of an amateur breakout, breakdown. So we had this activity here at these lows that was being led by the amateurs. They get wrong-footed, we go the other way. There's our exhaustion sell at the end of the week last week, and I thought we were going to turn down at that point, but no. We kept on going up. Again, move being led by the amateurs, so it's weak. I would say look to the low of the sequence of that Rambo pattern there. So that level was key, and as soon as we broke through that, we started to test into those lows. So here on this 13,500 2-bar chart, we've got an exhaustion pattern, bearish divergence, and a flush pattern here. We're rolling over at that point. So that means potentially we're going to have to see an exhaustion sell pattern similar to this one, getting the move going, kind of ending this move. So not particularly bullish for the beginning of this next week. It's going to be all kinds of market closures and stuff around the new year. But let's see if this rolls over. Cyclical patterns, yeah, we got a support in here on the highest time frame. We're not broken up with a signal like we had here at this point, so breaking below this 5992 area would mean that we're going for a little bit of a tumble into those lows. So I'm not particularly bullish on equities at the moment. We haven't done enough damage on the downside in order to get that exhaustion pattern there. So let's wait and see if this level gets hit. We head back down. But anyway, so that's some thoughts on the E-mini. Then we're going to run through the daily charts on a bunch of markets to see if we can see some of the rotations happening. And I'm going to start with bonds because I think that's setting up for me one of the most interesting patterns. I'm going to go through, this is the daily charts on TY, so the 10-year. I use the 10-year rather than the 30-year because the 10-year has more volume going through. It's more highly traded than the 30 years, but I think you can actually see similar patterns here. And on each of these higher time frame charts, I'm going to be looking at the daily chart in terms of beta sine wave for cyclical areas of support and resistance, and the beta pro-am chart for signals to see what the professionals are up to. So here we go. 10 years have been in a big decline since the end of 2021 here, and we've been in a big decline, bang, 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 going down. But we've got a whole bunch of cyclical supports starting to play out. We've got a little pullback to end of trend on the lowest time frame here. The intermediate time frame has got us with a support coming in here. We've just overshot it momentarily, and we have cyclical cross on the highest time frame here. So potentially in the next week or two we could have all of these come together. Yes, we need some strength in bonds, which means interest rates coming down in order for this to signal on the highest time frame, but that's something that's really important. So there we go. Cyclically on the 10 years, after all of this decline, we could actually see ourselves having a little bit of a pause and potentially move the other way. Now, this is the signals chart using beta pro-am. I've added a couple of things. These vertical lines just show us the beginnings, the January rotations, December into January rotations for the last 2 or 3 years. And sometimes you can see around those points. We have a lot of amateur activity leading into here, for example, into this end of year. We had amateur bars here, a couple here. I mean, it's amateur bars because the markets are thin at the moment and the amateurs are active. The average trade size is low, but that's not to disguise the fact that sometimes the amateurs at those points just get horribly wrong-footed. Yes, there's no blue professional bars yet, but they could be making a horrible mistake. And you can see here on the 10 years, we've got a whole bunch of Rambo patterns, 4 of them, coming into those lows. It's at an area where we have been before, tested down a couple of times, and there we got those Rambo patterns. Sometimes the market doesn't end in blue professional bars, buying the lows, and that's the end of it. Sometimes we can have nasty reversals from just amateurs being horribly positioned at this point. And I'm looking at this and I'm looking, look, there's those Rambo patterns right into that cyclical turning point support area. It's an area that we've tested into before, and that would be quite a trade to rotate into bonds at the beginning of the year. So let us see if that works out. Now, what does that mean for other markets? Because I think there's a ripple through effect. If we have bonds bottoming and starting to rally, that means rates are coming down. Rates coming down, macro picture, means that the US dollar is less attractive. 2 reasons why the US dollar would go up. Well, 3. The first one is the world goes to hell in a handbasket and everybody just jumps into the US dollar as a safety trade. But the other 2 reasons are interest rate differentials and assets in that particular market being attractive. Now, definitely the equities markets in the US have done better than anywhere else around the world, and so the money's been flowing around the world into the US equities markets. Definitely been true. But if we start to also get a interest rate differential that's no longer so positive, so the interest rates in the US go down, that makes the US dollar less attractive. Now, US dollar, what can we see? Here we've got cyclical patterns again starting to line up on the daily chart. This is the DX. Biggest two components are the euro and the Japanese yen in here. Here we've got a cyclical cross on the highest time frame coming in, and we put in a little pullback to end of trend on the lowest time frame here. Yes, we've overshot resistance on this highest time frame, but we've got to play out that energy, certainly, maybe with support to resistance after this. But pullback to end of trend and cyclical turn at some point in our future here. So that's interesting on the dollar index. Plus, dollar index here, let's look at the signals. This is what happened in the last couple of years. And here we go again, rotation, end of year, December into January, and sometimes Rambo patterns or amateur activities can be quite prescient. So that's the dollar index. Amateurs were shorting the dollar index at that point, and we've spent pretty much the whole year, yes, with a big down move here after amateurs being caught out those highs in this rally phase. No blue professional bars up here, but remember we're under this huge cloud of the dollar index up here at 110. So this whole area here is super important. Super high average trade size. We spend a year doing nothing, and then a year testing those lows and climbing. But remember, we've got that cyclical turn potentially in due in the dollar index. So dollar index weakening, because the interest rate differential is no longer all that attractive in the US. But which of those currencies is going to drive that differential? And this is where the euro is important. So the euro down here, we've actually had that little pattern play out. So here we go, at the end of the year, we got pullback to end of trend on the lowest time frame, cyclical support on the highest time frame, so that's syncing up. That's a trending move in a lower time frame, syncing up with a cyclical move, resistance to support, cyclical move in the highest time frame. Yep, we've overshot support on the intermediate time frame, so I'm sure we're going to have to make a pullback to end of trend or a resistance to support move on the intermediate time frame. But that's important, that's interesting down there. So cyclically, the euro looks strong. And we're testing into lows. Parity obviously was a super important level that we got to a couple of years ago. But we're now down at 4.5, 5 on the daily chart, and that's interesting. And on the signals chart, we're better pro-am. Big pro bars. Blue professional bars into lows and big pro bars as well. I mean, this is on a move down, but this is the type of thing that I would see that would worry me in the equities market on the reverse. So if we saw big pro bars and blue professional up bars, on the equities market, that for me is a really important signal to watch out and maybe think about taking profits. Yep, we've got a bullish divergence here. 104 is the level here, and down here this is the lows that we made last time. Exhaustion sold, bullish divergence, big pro bars. At that point we signaled come up. So of those forex markets, the euro is looking interesting. It's not broken up into an uptrend. The background's still in grey. We're still in the downtrend. But are the professionals starting to position themselves with this rotation, looking a year out because they're taking longer term positions? So the euro as that component of dollar index, that for me is looking interesting. So let's see if the euro for the first half of the year starts to strengthen. Japanese yen is the second biggest component of this, and this isn't ready quite yet. So here's the huge downtrend that we've been in Japanese yen. Once we broke this level here, and we just keep on breaking supports down and down and down. Look at the bars; they're all white, showing we're in a downtrend. We're in a downtrend. Any little strength that we had, I think this was the little spike that we had, the short covering rally on the Japanese yen, the reversal of the carry trade that everybody got spooked by, and then we found resistance and we're heading back down. But pull back to end of trend at some point. A cyclical cross here. But yep, we've overshot support on this time frame, and we're heading down because of the highest time frame here. You know, the red line, the fast line is going down. We've not got across. We're a ways away. Signals here, yeah, this is the last ones that we had. Every time we have a little bit of a spike back up, here's the blue professional bars, step in and so on. But down here at the lows, this is not actually signaled a Rambo pattern because I don't think that was like a new low down there. But that's an amateur down bar at that point. So now calling a reversal in the Japanese yen is a fool's errand. They call this the widowmaker trade. trying to go along the Japanese yen because it's not worked out for a long time. But at some point we'll have a cyclical pattern that'll pop up on the Japanese yen, and maybe that'll trigger also someday a sell-off in equities, because we'll have a reversal again of that Japanese yen carry trade, and everybody needs to repatriate funds back to margin loans that have been taken out in Japan. So it's not there yet. So the dollar index is component, two largest component. I think the euro is looking interesting for a reversal for maybe the first half of next year. Japanese yen's not ready yet, but if we get an equities pattern that pops up with that Japanese yen pattern, we could see a spike in the Japanese yen. We've got to look at the emerging markets, with Aussie dollar being a representative of those currencies. And being an Australian, looking at this at 62, and you look at the currency as a measure of the strength of the economy, just blows my mind that the Australian economy has ostensibly been strong. We haven't had a proper recession for God knows how many years. But all we got is a real estate market and mining, to be honest. And maybe that's not good enough we're not Switzerland. So, although we'd like to be the Switzerland of the Pacific. But anyway, so we're down here at 62, and we've broken supports down here. Bang, bang. Pull back to end of trend. We just ripped through that. We're down through support here. Yes, at some point we'll have cyclical support in the highest time frame, but it's not there yet on the Aussie dollar. And on the higher picture here, yep, we got some amateur down bars at this point here, not triggered Rambo patterns, but close to. And maybe that's just because the emerging markets are just not flavor of the month anymore. This is EEM, which is the ETF with the basket of emerging markets in here. And here we go. This is Blue Professional up bars into those highs. They were taking profits at that point, and the emerging markets have been weak since then. So in terms of cyclical patterns on the emerging markets, I mean, we're actually topped out here in terms of cyclical patterns, and we're on the way down here. So the other component of the dollar index is the basket of all of those emerging markets. So the emerging markets are certainly not going to be flavor of the month next year. Now, this for me is the most interesting market of the lot. It's the crude market, and we are sitting here at a confluence of patterns. Support, triple supports come in here. Came in a while ago. This is big things happen at triples here, but we've come back down, found another triple support pattern here, and we're just itching to break above this, above 71, and that'll trigger a sign of strength if we close above that level. And I think this is looking super interesting. Then let's look at the better prime pattern. Cyclically, we've been going nowhere for certainly the last year. The year before, we had some big lows and big highs being made here, mid-50s and then mid-80s down here, having had our spike previously. But this year, we have a whole bunch of blue professional bars. So some on the way up, some on the way down. Exhaustion sell, bullish divergence on the way down here. Maybe they got too excited at that point. I always say, look, when we got these big groups of blue professional bars, look for the highs and the lows to be tested. We came back down 1, 2, 3 tests of that low down here above 65, 66 down here. We've got amateur bars going on at the moment, just nothing happening yet. But that for me is looking interesting, because cyclically we're ready for a big move in crude. So whether we break up through 71 and then look to 75 and get this move going, or we just fail, amateur up bars, fail and go through 65, that'll be big too. So I'd like to think it's a break to the upside, but who knows. But crude, something big is going to happen in crude, and it's going to be soon. Natural gas, interestingly, so that whole energy complex might be interesting. So here was the natural gas. This was, of course, Ukraine that led to this move. Nice pattern here. Pull back to end of trend on the lowest time frame. Pull back to end of trend on the highest time frame. Sinking up there at those highs. Bang, we sold off super hard. So from up at 12.13, we're down at 3s. Down here, but we're trying to catch. One move didn't go anywhere. This next one here is holding. That's a little bit better. This one caught by resistance, so we overshot one level of resistance and we were caught by resistance in the next highest time frame. This one, we've gone through that intermediate time frame. We're looking at another level there. What is that? 350 and a bit for that on natural gas. And then when we go to the highest time frame chart, look at all these blue professional bars kind of come in here. So Rambo patterns got wrong-footed at the highs up there, and coming into these lows this year, exhaustion sold, bullish divergence, then we come back and sell it down again, but then this looked like they've been accumulating there, certainly on these lows, and buying the potential breakout here. So a break above 360, $4, that'll be interesting. So natural gas and crude. Now what that means for global politics is not great, because that signals that we're having problems kind of around the world. and that gold might be going up as well. It shows us political instability. So potentially we've got the energy sector and gold starting to rally. So that doesn't bode well for global politics. But anyway, here we go on gold. Yep, we've been in a nice uptrend, 2800 up here. But we keep on busting through resistances. The bars are red. We're in an uptrend, pull back to end of trend. Yep, had a little bit of trouble in the last couple of weeks. Is at the end here. We've got no blue professional bars at the highs, no Rambo patterns at those highs. This was buying the breakout. This was a gathering pattern, blue professional bars, 2400. We tested into it, and then this time they were just grabbing everything in sight. And then we had a little test of that move and then rallied through there. Same type thing on Bitcoin. I look at this chart and it worries me a lot. Anyway, so we're in an uptrend on Bitcoin. We found support. 56 is here. Big things happen at triples. Sign of strength here. We've just been ripping ever since. Yep, we got to 108 and we've come back down quite a bit from there, but it's just pullback in an uptrend at that point. We've got to make pullback to end of trend on the intermediate time frame before this is all over on the Bitcoin. And up here at the highs, is this what has me worried? These blue professional bars, are they taking profits or is that a gathering pattern, buying above 75? Because this thing is going to 175. So far, we have to make all of those cyclical patterns before this thing is all over. But yes, if that's a gathering pattern at 75 that takes us to 175, that's extraordinary. But it could be. It could be. We just have to wait and see how this plays out. So what have we got left? Let's talk about copper. Yep, copper. Cyclical support happening here. It's been unloved for a while. Pull back to end of trend on the lowest time frame, syncing up with cyclical support on the highest time frame and cyclical support on the intermediate time frame. So that's an area of support, and at the moment we've got amateur down bars into this area here. So copper, yes, we have this huge cloud of 530 here, but we also have down here at the lows at $4 an interesting area of support. And everybody's talking about electrification, that all of a sudden we're going to need triple the size of the electric grid and so on. All of that needs copper. So maybe the price of copper starts to reflect that fundamental good story that should be moving the price of copper. Lastly, in ag, let's talk about corn down here, because it's the only one at the moment that looks interesting. Big downtrend in corn, bang, 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 but pull back to end of trend. We've got some area of support here. This last sign of weakness seems to be catching. You can see we've got a whole bunch of blue professional bars going on here. We'll have a little bit of trouble when we get resistance on the highest time frame here. But the daily chart on corn looks like it might be starting to catch. And down here at the lows, last time they were in, here's the highs that were made. Exhaustion buy, bearish divergence, flush. Blue professional bars sold it down at that point, but then they were maybe buying all of this down here at 425. And we're starting to rally, sign of strength there. So of the ags, corn looks interesting. So there we go, big picture asset rotation that we have typically December into January, where people are looking at the big picture, positioning themselves for the next 6 or 12 months. And I think we've got some interesting things going on. So hope your trading is going well, and Happy New Year, and looking forward to the next couple of weeks.